All right, let's jump into today's deep dive. We're taking a look at the 2023-2024 annual report for Kalyan Jewellers. I'm sure a lot of you have heard of them, big player in the Indian jewelry scene. But this report's really cool. It's like a backstage pass, We get to see their financials, their strategies. They even lay out their vision for the future. What I'm really interested in is how they're managing to, I don't know, how they're balancing that really strong sense of tradition with, well, everything changing so fast.
Yeah.
The market, technology, everything.
Yeah, that's what makes this report so interesting. It's not just like a dry financial statement. It's almost like a story,
Right.
about how a company so connected to Indian culture is adapting to this digital age. And they've got global ambitions too.
Oh, yeah, totally. But first, the elephant in the room, Kalyan Jewellers is doing incredibly well. We're talking 32% revenue growth in FY24. And their EBITDA is way up too. That kind of success, that doesn't just happen, right?
No, definitely not. There's a real strategy at play here. And it's not just the usual, let's just open a ton of new stores approach. They've definitely expanded, no question. They went from 147 showrooms in India to 204. But what's really impressive is their same-store sales growth. That tells me they're not just relying on new locations to bring in the money.
So it's like they're doing something to keep people coming back to the same stores. The report calls it a hyper-local business model, which sounds a little bit like a buzzword, to be honest. But I am curious, how does that actually work in practice?
Okay, imagine this. You walk into a jewelry store, and it feels like they just, I don't know, they get you. They get your community, your style, everything. That's what Kalyan Jewellers is doing. They tailor everything, from the ads they run to the actual jewelry they sell, even down to the people who work in the stores.
Wait, really? They change what they sell based on location?
Oh, yeah, big time. Like in some areas, it's all about traditional designs. Then in other places, it's more contemporary, lighter pieces, fusion stuff. They're not trying to be a one-size-fits-all kind of brand.
That's actually really smart, like hyper-personalized, but for jewelry.
Right. And it goes deeper than that. In some regions, they even work with local artisans to make sure the craftsmanship matches local preferences. And the staff in the showrooms, they speak local languages. It's about making those cultural connections, making people feel comfortable.
I see. So it's about that personal touch.
Absolutely. They even have this network, it's called My Kalyan, over 4,000 people doing grassroots outreach, getting into urban areas, semi-urban, even rural places.
Wow, that's serious commitment. But okay, they're nailing the local thing. But what about the online world? Everyone buys everything online these days.
Oh, they're definitely not ignoring that. Their digital-first platform, Candor, saw huge growth last year, brought in over 1,303 million, mostly through digital channels, and they're planning 50 new Candor showrooms in the next year.
Hold on, so they're expanding both online and offline. Most companies I see are picking one or the other.
Right, but that's what makes them so interesting. They're blending the two. Like, you can browse online, find what you like, and then go to an actual showroom to see it in person. It's what do they call it? An omni-channel approach. And it seems to be working really well. They launched their first FOCO showroom last year, franchise-owned, company operated. And by the end of the year, they had 13 of them up and running.
Okay, so they're playing both sides, but they're doing it well. What I'm really curious about is their Vision 2025. The report makes it sound pretty grand. What's the big plan?
Let's just say ambitious is putting it mildly. They're talking about a 40% increase in Kalyan Jewellers stores in India, plus 50 new Candor showrooms on top of that, and then expansion into the Middle East and international markets, including, get this, their first U.S. store. They're hoping to open it by the end of the first half of FY25.
Whoa, that's a lot of expansion and fast. Are they biting off more than they can chew?
It's a bold move, for sure.
Yeah.
But they're not just throwing money around. Instead of owning everything, they're converting some of their Middle East showrooms to franchises. It's a smart way to free up capital and invest it in these new markets.
So it's like strategic spending, not just spending to spend.
Exactly.
But are they going to lose control of quality if they go the franchise route? I mean, the brand experience, all that.
It's a valid concern, but they seem to be very methodical about it. Like, they're carefully transitioning the Candor showrooms, being selective with which ones they convert. They're even running pilot projects. It's not just, let's grow as fast as possible no matter what. It feels very calculated.
I see what you mean. Ambitious, but not naive.
Right.
They're balancing growth with, keeping what's working.
Exactly. And I think this careful approach, it comes from their deep understanding of the Indian jewelry market.
Okay, so let's talk about that. The report talks about the market being very traditional, but also rapidly changing. What does that even mean for a company like Kalyan Jewellers?
Well, think about gold in India. It's not just jewelry. It's about Wealth, security, hedge against inflation. It's even used as loan collateral. It's tied to culture and finances. It's deep.
Right. Gold is a big deal.
Huge deal. But at the same time, you've got this rising middle class, younger generations with different tastes.
So they're trying to appeal to, like, grandmothers who want traditional pieces.
Yeah.
And their grandkids who want something more modern.
Yeah, it's a tough balancing act.
No kidding.
But the report shows that there's a growing demand for both traditional and contemporary designs. Lighter pieces, fusion styles, those are becoming really popular, especially with younger buyers.
So it's not just about, the heavy gold bangles anymore. They're adapting to what people actually want to wear.
Exactly.
But I'm guessing weddings are still a huge driver.
Oh, absolutely. Bridal jewelry still dominates the market. We're talking 50–55% of all gold jewelry sales.
Wow, that's a lot.
Yeah, but even there you're seeing a shift, like lighter pieces incorporating diamonds, maybe colored stones. It's tradition, but with a modern twist.
Okay, so we've got this company doing incredibly well, expanding left and right, and somehow managing to appeal to all sorts of different customers. Who are the people making all this happen? I'd love to know more about, the minds behind the operation.
Well, the report highlights some of the key players on the board. The managing director, Mr. T.S. Kalyan, he's been there since the beginning. We're talking over 48 years of experience in retail, and 31 of those specifically in the jewelry industry. He knows this business inside and out.
It's a lot of experience.
It is.
What about the rest of the board? Are they all jewelry experts?
Not exactly. They've got Mr. Anil Sadasivanair. He's an independent director. He brings over 20 years of experience in advertising. So his expertise in marketing and communication, that's crucial in this industry. Trends and perception, that's everything.
Makes sense.
And then there's Mr. T.S. Anatharaman, another independent director. His background is in banking, management, and accounting.
Okay, so it's a good mix, not just a bunch of jewelers, patting each other on the back.
Right. It's a strategic mix. You need that combination of expertise to navigate this market. Business strategy, sales, marketing, finance, operations, even corporate governance. It's complex business.
Absolutely. They're not just selling pretty things. They're running a serious operation.
Exactly.
Okay, so they're smart, they're experienced, and they're making money. But are they giving back? What does the report say about their social responsibility efforts?
Their commitment to social responsibility is pretty impressive. One of their major initiatives is this project called Bhumijitham. They're working with the Kerala state government to build homes for families that are struggling financially. They've contributed nearly 3 crore to that.
That's fantastic.
It is.
Is it just a one-time thing, or are they committed to social impact in the long run?
No, they've got other programs too, like their education sponsorship program in Kerala. They help kids pay for their education. They're working with schools, organizations like Bloom's School, Savasadhanam, even special schools for differently abled children. It seems like it's a core part of their philosophy.
I like that. So far, this deep dive is painting a pretty positive picture.
It's definitely a compelling story, but we need to dig into the financials a bit more. See how sustainable their success really is.
You're right, the numbers don't lie. Let's take a closer look at that balance sheet next. See what it reveals about their financial health. Join us in part 2 as we continue our deep dive into the world of Kalyan Jewellers. All right, welcome back to our deep dive into Kalyan Jewellers. In part 1, we got a taste of their incredible growth and that really unique approach, blending tradition and modern ideas. But now it's time to get down to brass tacks. Let's talk numbers, the financials.
Yeah, let's do it. The numbers tell a pretty fascinating story, actually.
Okay, so paint me a picture. What's the overall financial health of Kalyan Jewellers looking like?
In a word, strong. Their financials for FY24 were really impressive. For one thing, their revenue was a massive $185,483 million. That's a 32% increase from the previous year.
32%. That's not just growth. That's like taking off. Is it all those new stores we talked about earlier?
It's a mix of things, for sure. The expansion definitely helps. But their same-store sales growth, that's telling too. It means their existing stores are performing really well, shows their brand and sales strategies are working.
Right. Makes sense. But revenue's only part of the story. What about profitability? Are they actually turning a profit?
They're making money, all right. Their EBITDA, that's earnings before interest, taxes, depreciation, and amortization. It jumped to $11,157 million in FY24, up from $9,331 million the year before.
So the money's coming in, and they're keeping a good chunk of it. What about their profit after tax? What was the final number?
Their profit after tax for FY24 was $5,963 million. That's a solid number. Shows their operations are efficient and their strategy's working.
So far, so good. But I'm also curious about the details. What does the report say about their assets and liabilities? I want to
Okay.
see how they're managing their money.
Sure, let's dig a little deeper. Their total assets in FY24 were 128,177 million, a big jump from the year before, mostly due to their aggressive expansion. They're investing in new showrooms, infrastructure, the stuff that fuels growth.
Yeah, they're putting their money where their mouth is, literally building for the future.
Yeah.
But what about the other side of that coin? How much debt are they taking on to finance this expansion?
Their total liabilities reached 107,129 million in FY24. But here's the interesting part. Their debt to equity ratio actually went down compared to the previous year.
Hold on, so they're expanding, taking on more debt, but their debt to equity ratio is better. How does that work?
That's a sign of a company that's managing its finances well. A lower debt to equity ratio usually means they're using less debt to finance their growth, which can mean more stability in the long run.
Okay, I see why you said their financial picture is strong. They're growing, they're profitable, and they're handling their debt responsibly. But there was something else in the report that caught my eye. Remember how we talked about them converting some of their Middle East showrooms to franchises? I'm curious, why are they doing that?
It's all about smart capital allocation. By switching to franchises, they free up money. Money they can then invest in other promising markets, like their push into the U.S.
So instead of holding on to every single asset, they're being strategic about where they put their money.
Exactly. It's about focusing on the areas with the biggest potential for growth and using their capital efficiently.
That makes a lot of sense. It's interesting, too, that they're trying to increase revenue from markets outside of South India. Seems like they're trying to diversify geographically.
Absolutely. They're looking beyond their traditional strongholds, trying to tap into markets with lots of potential. They're even expanding their My Kalyan network, reaching out to new customers across India.
It all sounds promising, but I have to ask, what about the risks? What kind of challenges might they face in the future?
That's a good question. And the report does mention some potential headwinds. One of the big ones is the growing competition in organized jewelry retail.
That makes sense. As the market grows, more players are going to want a piece of the pie.
Exactly. And it's not just traditional jewelers. They're also facing pressure from online platforms and those big e-commerce giants moving into the jewelry space.
So they're going to have to fight to hold on to their market share.
Definitely. They can't just sit back and relax. They need to keep innovating and adapting to stay ahead. Another challenge is the volatility of gold prices. Gold is a global commodity. Prices go up and down based on all sorts of things. Supply and demand, the global economy, even political events.
So it's a wild card, something they can't really control.
Right. They're going to need to manage their gold inventory carefully, plan their purchases strategically, maybe even look into hedging strategies to protect themselves from price swings.
It sounds like they're going to need to be flexible and plan ahead. But from what we've seen, they seem to have the experience and the know-how to handle it.
I agree. They've got a strong track record, and they're clearly aware of the potential risks. But it's important to remember the Indian jewelry market is huge. Lots of opportunities, but also lots of challenges.
Yeah, it's a dynamic market.
Exactly.
Sounds like they're up for the challenge. But there's one more thing I want to touch on. We've talked about their financials, their strategies, but what about the ethical side of things? What does the report say about their commitment to corporate governance?
That's a really important point. These days, consumers care about more than just the bottom line. They want to know the companies they buy from are ethical and responsible.
Exactly. So what's the deal with Kalyan Jewellers? Are they walking the walk when it comes to corporate governance?
They seem to be taking it seriously. The report highlights their risk management framework, their vigilance mechanism, and their commitment to SEBI regulations. They've got a clear whistleblower policy, so employees can report any unethical behavior. And they have a whole committee dedicated to assessing risks.
So it's not just lip service. They're actually putting systems in place to ensure transparency and ethical conduct.
It seems that way. They understand that good corporate governance is about more than just avoiding trouble. It's about building trust with customers, investors, the whole community.
Okay, we've covered a lot in this part of our deep dive. Impressive financials, strategic expansion, risk management, even corporate governance. I feel like there's still more to unpack. What other insights can we get from Kalyan Jewellers' journey? Join us for the final part of our deep dive as we zoom out and look at the bigger picture. Okay, welcome back to the final part of our deep dive into Kalyan Jewellers. We've really gotten into the weeds with their financials, their strategies, even their commitment to doing business the right way. It's been a fascinating look, that's for sure. But what I'm really wondering now is, what's the big takeaway? What does it all mean in the grand scheme of things?
That's where things get really interesting. Kalyan Jewellers, it's not just about their success. It's almost like a case study, a glimpse into how retail might evolve in the future.
Okay, I like that. Give me an example. How so?
Well, think about that hyper-local strategy we talked about. It's all about understanding those cultural nuances, adapting to different tastes, building trust. It's like they're taking that old school personal touch and applying it on a massive scale.
Right, it's like they're proving that you don't have to sacrifice that personal connection, even when you're a big company.
Exactly. But at the same time, they're not afraid of technology either. Candor, their online platform, that shows they're embracing the digital world. It's not about choosing one or the other. It's about finding that sweet spot, blending the two approaches together.
So they're not stuck in the past, but they're not abandoning their roots either. That's a tough balancing act.
It is.
Do you think other retailers can learn from this? Is this like the roadmap for the future of retail?
I think there are definitely lessons to be learned here. Consumers today, they want convenience. Online shopping is great for that. But they still value that personal connection, that feeling of being understood.
Yeah.
Kalyan Jewellers shows that you can offer both.
It's like sometimes the best way to innovate isn't to just throw everything out and start over.
Yeah.
It's about finding ways to make the old and the new work together.
Absolutely.
Anything else that stands out to you about their approach?
Well, their expansion strategy is really interesting. It's not just about growth for the sake of growth. It's strategic, They know when to invest, when to franchise, when to jump into a new market, and when to hold back.
So it's like they're picking their battles carefully.
Yeah, they're making sure every move aligns with their overall vision.
It reminds me that expansion can be risky if you don't do it the right way.
Absolutely.
And we can't forget about their commitment to ethical practices and social responsibility. They're showing that doing good can also be good for business.
Right. Customers are more aware than ever. They want to support companies that share their values.
Exactly. Kalyan Jewellers are proving that you can be successful and still do the right thing.
It's about building a brand that has a purpose, something bigger than just making money.
So, as we wrap up this deep dive, what's the one thing you want our listeners to take away from all this? What have we learned from Kalyan Jewellers that we can maybe apply to our own lives or businesses?
I think the key takeaway is that success these days requires a multifaceted approach. It's about finding that balance, Tradition and innovation, local and global, online and offline, profit and purpose. You need a clear vision, a smart strategy, and the willingness to adapt and evolve.
It's an inspiring story for sure. And it's a good reminder that even in a world that's constantly changing, some things never go out of style.
Like what?
Hard work, integrity, truly understanding your customers, those things will always be important.
Couldn't agree more.
Well, thank you for joining us in the deep dive into the world of Kalyan Jewellers. We hope you found it as insightful as we have. Until next time, keep learning, keep exploring, and keep pushing the boundaries of what's possible.